All right, welcome back into Market Day Report. Thanks for joining us on a Friday, right? Boy, oh boy, we made it. Let's not screw it up. We only get 52 of them a year, so I'm not going to let this one go by. Let's take a look at what the markets have got in store for us. I pulled up a corn board while we were away on break, and we've got a 2 to 3 cent rally, 2 1/4 to 3 cent rally. 2.5 cents better in D's corn right now. 4.24.5 is last there. We're up 3 cents in July corn. 4.52.5 is last there. So we've got a decent rally in corn. Again, 2 1/4 to 3 cents across the board. Beans also on the upside. Let's go 6 3/4 cents higher in the Nove up front. 10.17.5 is last, about penny and 3/4 off the high of the day. We've had about a 9-cent range. If you move out to the Jan, that's up 7 1/4 cents to 10.35 3/4. A penny off the high of the day there. That's soybeans. If we move over to the Chicago wheat market, let's see what Chicago wheat's got in store for us. Well, anywhere between a 2 1/4 to 3 1/4 cent gain across the board. Quietly better. We like to see that. Deese is up 2 1/4 cents to 5.04 3/4. While July wheat in Chicago, that's up 2 3/4 cents to 5.43 1/4. Moving out from Chicago wheat, let's go to the Kansas City. They call it the hard red. That's the hard red wheat in Kansas City. Up a penny and 3/4, quietly higher in the day here. 4.90.5 is last there, a penny off the high of a 6-cent range. We've got July up a penny and a half to 5.38 3/4. Let's check cotton, and we'll get to our guest analyst. What's going on with the cotton? Well, it was higher earlier. It still is, but we've given back a little bit. 34 points better in the Deese cotton. 64.07 is last, right in the middle of the trading range. 34 points better. Deese cotton stands at 64.07. Let's bring in our next guest analyst, Mr. Nick Paumen. He's with CHS. Nick, thanks for joining the show all the way from Inver Grove Heights, Minnesota. That absolute beacon of light of all the CHS guys. Best place to work in Inver Grove Heights. Thanks for being on, Nick. All right, brother. What do you got for us? What's top of mind with you?
Well, it's the little bit of a rally, I guess, we're seeing in December corn and beans this week. You know, for the week, we're up anywhere from 3 to 11 cents in corn and 5 to 13 cents in beans. So a little bit of a late season rally or mid-harvest rally. Seasonally speaking, December futures can tend to bounce back a little bit towards the end of the month and kind of hit the highs of the fall, late October, early November. So I think that's part of what we're seeing here now. Of course, it's about money flow today too. You know, you got gold and silver and some of the macro markets lower, but you got the grains higher. So we're probably seeing a little bit of strength from that too. So, but yeah, I've seen a little bit more farmer engagement here to end the week with prices snapping back a little.
How much, I mean, depending on their inputs, I know it changes from producer to producer, but how much interest have you guys seen in, say, Deese corn next year, Deese at 26 and Nova 26 beans?
Yeah, there's been a little bit of that. I wouldn't say flat price selling or just futures selling, but some of the structured products and OTC things like that, we've seen some interest over the last few months here as we spike like we are kind of seeing right now. So it tends to pick up there. But heading into the fall and into the winter, beans may want to buy some acres back to get back up to that maybe 83, 84 for next year. And corn probably doesn't want to give up acres. So I think you may see a little bit of a price battle into the winter as we figure out acres for next year. So, I think there's a reason to stand that we may see a bounce because of that.
When you talk about those structured products and you talk about maybe those OTC things, I know some of the producers out there are familiar with them, but I mean, how much of your book, without giving away too much, do you do a lot of OTC stuff, or is it kind of an add-on?
Yeah, it's definitely one of those, the cliche saying, tools in the toolbox. And it's definitely one of those tools to have in the toolbox. There's a place for them. There's time to use those things, and there's time to use just cash sales and just use HTA. So again, it's one of those, you have that tool in the toolbox and use it, when you need it. And when prices rally, they look better, and again, might be time to use them. So.
All right. My last question before we go away, though, is I've asked this with everybody. Obviously, the farmers are in line to get some sort of compensation from the government this year when and if they ever come back to work. I kind of like them not working because I can't stand listening to them talk. But anyway, do you see some guys hanging on to stuff a little bit longer here because they know they've got a payment coming around the corner?
Well, I think you would have seen guys holding on a little bit longer if the government had stayed open. Now that we don't know, to your point, when singles reopen, and you are seeing that little bit of a bounce back to end the week here. I think you're seeing a little bit more cash flow being generated now by guys selling, corner beans or whatever the case may be. But yeah, when we get details that there is a payment coming and what the amount's going to be, you may see guys pull back a little bit and wait for higher prices. I mean, we saw it in the previous Trump administration with that.
Yep, that's why I'm asking. You're a mind reader, Nick. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock right after this.